We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been getting bigger. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest in everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking about a very concerning pattern that is showing up right now on the hourly chart. And it is none other than this. For any of you guys who have been watching crypto YouTube for any length of time, you'll be familiar with the Head and Shoulders. And no, we're not talking about the shampoo that your grandfather uses that makes him smell like that. We're talking about the pattern that is going to cause Bitcoin to potentially go through a major correction. If you'll remember to yesterday, we made an updated call. Part of what I do on this stream is I'm doing live technical analysis and doing my market research live on air. And I'm building my predictions live on air and sharing them with you. And what we've come to understand is that this is what I think is going on right here. And I'm going to go over it again here in just a minute. And we're going to kind of dig into what's changed, how that's updated, because I like to give us a framework from which we can operate. After Friday's announcement that there were going to be 100% tariffs on China, literally everything from every single analyst that happened before that had to go out the window, including our October 15th prediction. Before Donald Trump crashed the market, we probably would have been on track for about $130,000 right now. We were getting to the point a few days ago, about a week ago, of saying it was probably going to have to be pushed back to maybe October 30th, just because Bitcoin was looking a little bit more bearish. But after we saw this capitulation event, we have entered into a completely new market that invalidated all previous technical analysis and invalidated all previous predictions. So the moment that Bitcoin fell off that cliff is the moment that the $130,000 price target was invalidated, once again because of Trump's tweet, which was an unforeseeable event. Ever since then, we've been trying to rebuild for ourselves another model of what Bitcoin is doing and where it's going to go, because we are in a new market today compared to what we were in 1 week ago today before Bitcoin jumped off the metaphorical cliff. So is Bitcoin going to rally to $130,000? Absolutely. Is it going to do it by the end of October? Possibly. Not necessarily. We'll talk about why that's a possibility, but probably not going to happen a little bit later. But today I want to break down where Bitcoin is. I want to talk about what the triggers are that would cause Bitcoin to go in a direction that should prompt us to go into a trade. And we should be talking today as well about where we think Bitcoin is going to go in the long-term future over the course of Q4, moving on into Q1. I have a very, very large amount of confidence at this point that most of our cycles are going out the window. It is now October 15th, which means we're about to enter into the second half of October. And October is looking a lot more like an October than what we were anticipating, large in part because of what Donald Trump did with that tariff announcement. That said, that announcement, although tragic for all the people that got liquidated, and I want to acknowledge that, may end up being one of the best things that could have ever happened to Bitcoin. Because the crash that happened very well probably accomplished 30 to 50% of what a bear market needed to. I'm serious. Literally, in like an hour, Bitcoin liquidated all the longs. All the leverage was knocked out. That's the whole point of a bear market, is to shake out the weak hands. The weak hands got shot, is what happened. Wow. I'm not just talking about the weak hands, I'm also talking about the over leverage, right? Which is a form of a weak hand, right? We are witnessing right now what might be the early phases of the death of the four-year halving cycle. And so we're going to be talking about exactly what that looks like today and why we might, instead of seeing a four-year halving cycle blow off top, might see some correction in Q4, followed by some extreme bullishness moving into the end of November and into December and on into Q1, which would be in direct contradiction to the four-year halving cycle, which says that the blow off top should be happening in October and November. We're going to break down all of that and more in today's episode. Let's go ahead and say good morning to everybody in chat. Brian is in chat. Arthur DeVroom is in chat. Kryptoni is in chat. Philly Skills 1428 is in chat. Chance Nelson. Christopher Ryans. Alan Ricard is in chat. Ryan Kessler, BG, Quinn Daughtery, Christopher Ryans, Ryan Kessler again, D, Dre, Peter P, Queen. Good morning to all of you. Love to see your smiling faces. Welcome to the stream. My name is Jeb McAfee. I've been working in the cryptocurrency markets for over 8 years now. It is my dream, it is my hope, it is my desire to help you actually make money here. Because there's a lot of money to be made in Bitcoin and cryptocurrency if you know what to do, when to do it, and how to do it. And so our dream is to help you 10x your net worth, 100x your net worth, build generational wealth. I want you to have a giant Bitcoin stack, and I want to help you build that. So that's what we're going to do today. Let's get started. First thing that I want to cover is the shorter term time frames. Right now, Bitcoin is forming a head and shoulders pattern as we talked about. And this is especially concerning because Bitcoin doesn't need any help being bearish right now. Bitcoin instead obviously would definitely love a little bit of loving on the upside. And so what we are witnessing right now is a set of lower lows, which is something that I was concerned about. Sorry, lower highs, which is something that I was concerned about yesterday. After yesterday's analysis, we saw that Bitcoin corrected for 13 candlesticks straight on the hourly chart. And we also saw that Bitcoin was beneath these two downtrends, this downtrend right here and this downtrend right here. This second and bottom downtrend is, in my opinion, the most important because not only is it built by the market that we saw before the Friday nuclear meltdown of 1010, it also is corroborated by this high that we set back on Monday, which also happens to be sitting at the 0.382. So this is a very powerful downtrend that I was concerned that Bitcoin would be stuck under. After we bounced and only managed to rally up to the 0.382, that's all we managed to do. We drew a fib from here to there, top to bottom. We only managed to rally up to the 0.382. Double topped on it. Massive crash. Dropped back down to baseline. Rallied up. And now, as you can see, if we just go ahead and remove this box, it'll be a little bit easier to see. As you can see, Bitcoin tried to break through the 0.236 at 113.76, and it was a non-starter. That's pathetic. It's pathetic. It doesn't get much more bearish than that, which is why I've been leaning more bearish until proven otherwise. Bitcoin is obviously in great danger right now of falling significantly farther. What we need to see happen now is that Bitcoin desperately needs to reclaim above 114,000, which, by the way, was our level of support back here, turned into resistance yesterday. Bitcoin desperately needs to set some higher highs and higher lows, because right now all we're dealing with is equal lows and lower highs. And in doing so, by following the Fibonacci and having all that sell pressure up there, because there's a lot of sell side liquidity, I'll show you in just a minute over on CoinGlass. We've set this inverse head and we've set this head and shoulders pattern. If you draw the price target off of this head and shoulders pattern, it gives you a price target of 104,000. And so if that breaks, quite a lot of things break at once. If we break this, if this head and shoulders pattern breaks, this uptrending level of support breaks also. And part of the reason that you need to be concerned about that is because, not concerned about it, but you need to know about that, is because we have one touch right here. We have one touch. We have a second touch here, right? Right here. And then we, of course, have 4 more touches over here on this uptrend. 1, 2, 3, and we're almost back down there right now, so we'll call that a touch 4. We have touched this uptrending level of support 6 times, and a couple of things have happened during that time. Number one, the times that we've touched this uptrend have gotten closer together. We're touching this uptrend more often. We're testing this uptrend more often. The second thing is that Bitcoin in general is becoming less and less far away from the uptrend when we're testing it. It's a little bit like a ball bouncing. If you drop it on the ground, it's going to bounce high, it's going to bounce lower, lower, and lower, and lower, and lower until it stops. Well, the market doesn't ever stop on a trend line. If it just stops on a trend line, it breaks it, right? Because we're not actually dealing with physics here. We're dealing with technical analysis and uptrends. So if Bitcoin just stops above an uptrend of support, guess what happens? That support breaks. And so I am not going to tell you with confidence that Bitcoin's going to break through 110, which is our support, until it does it. But what I will say is that would be an excellent opportunity for a short trade. Excellent opportunity for a short trade. Because people are going to be freaked out if we drop below that level, and you're probably going to see a very fast move. Keep your risk to reward very tight, but a price target would probably be down here around 105. If we look at our 4-hour, let's see. If we look at our 4-hour chart here on the visible range volume profile, you're going to see that there is a considerable amount of support here at about 105. Let's look for other uptrending. Let's look for other levels as well. Out on the 3-day, I think it is. Maybe it's the weekly chart. Yeah, so on the weekly chart here, if we were to, for example, break down below 110, you're also going to notice that we would be falling below the 20 weekly EMA, which would probably mean that the correction is almost over, right? You can see that. The last time that we fell below the 20 WEMA, we stayed down there for a couple of months and then bounced and we went on to a massive rally. That's what happened in July and August and September of 24. That's what happened in spring of this year. And it is, frankly, what I think is going to happen now. I think more likely than not, you're going to see Bitcoin break through this, come back down to baseline to between $95,000 to $100,000, break below the 20 WEMA, and that is going to signal the breaking of the 4-year halving cycle. Well, Jeb, wait a second. Well, hang on. So you're saying in Q4, Bitcoin hit an all-time high, and it's going to probably drop 25 to 30% from all-time high, and you're not saying that that's in accordance to the 4-year halving cycle? No, I'm not. I'm not saying that at all. It's not at all the 4-year halving cycle bear market. It's just not. Why? Well, when you never had the blow off top. The 4-year halving cycle bear market has to go in a certain order. You have to have the accumulation phase. You have the run up. You have the blow off top. You have the gigantic crash. Then you have accumulation again down at the bottom. If you did not see a parabolic blow off top, then you don't see the 70% bear market. What instead you might see is Bitcoin laddering up on one single uptrend. I've got so many charts here, and they've all got stuff on them. What you might instead see is that after the Bitcoin ETF came online back here at $45,000, $50,000, Bitcoin just follows this uptrend for like the next 10 years. It literally might do it. If you zoom out and you move this uptrend, keep it accurate, by 2035, it's only at $480,000. What, you think Bitcoin can't go to $480,000 in the next 10 years? Does it really make any sense that Bitcoin would spend much time at all below this uptrend? It's a very shallow uptrend. This is, by the way, on the linear chart, regular chart. If Bitcoin dropped back down here and tests this uptrend, I understand that it looks like, man, look at all this open space down here. That is scary, all that open space. But if we're even close to serious about some of the price targets that we've made on Bitcoin of several $100,000, well over $1 million on Bitcoin, why can't we hold that uptrend? Why not? Literally, this uptrend, by the end of the decade, 5 years from now, just imagine what's happened in 5 years. That uptrend gives us support at $250,000. That's a continual average growth rate of basically nothing, right? If you drew this on the linear chart, on the log chart, then what you end up having to draw is a curve that looks like, I mean, it's even lower than this. Yeah, it's like, yeesh. You can't even get the curve to match it because the support, it looks like this. Like, do you think that Bitcoin could possibly follow that? That's $250,000. It's even lower than that, actually. Let's see. Can we get it closer? It looks like that. That's what that trend line looks like on the log chart. So in previous markets, we've done this, but with the mass adoption of Bitcoin in future markets, we're going to do this? That makes no sense. You really think we're going to go into a inverse banana market with mass adoption going on? Bitcoin getting gobbled up so fast. I've said this before. I've been very vocal about this. I believe that the 4-year halving cycle is dead or dying, and I think this year we will have evidence that it's dead. You like to hear all of that. What you don't like to hear is that the evidence of its death might be a back test down to $100,000 in the next few weeks. How is that evidence of the Bitcoin bear markets, of the Bitcoin 4-year halving cycle's death? By the way, not the bear market. You're always going to have a bear market. Bitcoin's going to drop 40% 1,000 times. in the future. I mean, if it lasts 1,000 years, it's going to happen 1,000 times. It's going to happen probably once a year forever. 20, 30, 40%. Once a decade, twice a decade anyway. I mean, even the stock market goes down 40, 50, 60% at times. So yes, Bitcoin's going to have large capitulations. Totally. But it's not going to be on a 4-year cycle. It's not going to be that predictable because of the halvings. I have said for years, I think I started saying this in 2020, that eventually the halving of the block reward is going to become so insignificant that it doesn't freaking matter. And at that point, all it is a self-fulfilling prophecy. Self-fulfilling prophecies don't last because there's nothing behind them. As people have been talking about the business cycle and the liquidity cycle and all these things, that is what Bitcoin is going to be governed by in the future. The 4-year halving cycle, write it down. I've posted on Twitter. It's bookmarked so I can repost it in the future. The 4-year halving cycle is dead or dying. And it's probably dead right now. It's probably dead right now. In fact, look, I posted this on September 24th. I can hear myself, in fact, I had this pinned to my Twitter for like a month. I can hear myself now saying back in the 2010s and 2020s when we had 4-year halving cycles while doing historical technical analysis in the next 3 to 10 years. It's dead. Here's on September 5th. The 4-year halving cycle is dead. The 4-year halving cycle is dead. It's dead. Okay? It's dead. And it might have another 4 years in it. Maybe. But it is dying anyway. So what's the point here? What am I getting at? Here's the point. The point is, if the 4-year halving cycle is dead, then that means that we need a new cycle, if you will, a new force to govern Bitcoin's motion. If that is no longer the 4-year halving cycle, then the question becomes, okay, what is it? I think in large part, it has to do with this uptrend. This uptrend has 3 touches on it that span over 2.5 years. This is a very powerful uptrend on Bitcoin. And the good news is we're so far above it that dropping back down to this uptrend would absorb so much bearish energy that it would probably hold. Probably. And if not, look, if it doesn't hold, here's another trend line for you. Let's say that trend line doesn't hold. Here's another one. Oh, by the way, oh, wow. Yeah, that really kicks in, doesn't it? Look at that. On the linear chart. You connect these 2 highs, extrapolate the trend line. You got a bounce right there. You got a test right there. Look at that. We have incredible support. We have incredible support at 95,000. There's a very real possibility that Bitcoin sends a candle body down to 100,000. You wick down to 95 to liquidate everybody who thought they were safe, putting their liquidation price at 97. Everybody with liquidation prices below 90 are fine. Bitcoin bounces from there because Bitcoin at that point in time will have retraced from $126,000, 25%. That's a very large, very healthy correction, right? This was a 32% correction. This over here was a 25% correction, right? A correction of 25% is the norm now for Bitcoin. A drop down to 95 to 100 is what I am leaning in the direction of, unless Bitcoin can confidently reclaim above 116. That's why I wrote down my prediction and my thoughts yesterday right here. So long as Bitcoin is steady beneath $116,000, then I think there's a 45% chance that we bounce at 110K or we drop to long-term linear chart uptrend. Both scenarios do not lead to a typical 4-year halving cycle bear market, but an explosive rally above 125K within 3 to 6 months. I also think that there is a 10% chance of a traditional 4-year halving cycle bear market down to $75,000, and then we bounce. If Bitcoin is steady above 116K, then you're probably going to witness a blow off top, which would be more akin to the 4-year halving cycle, and that would send us to $130,000 to $150,000 by the end of this year. That said, that does seem a little bit less likely. Okay? So, that's what I'm looking at. Down here on the hourly chart, if Bitcoin is able to get back up above and sustain above 116, you're probably going to 130 relatively soon. If not, if Bitcoin just sits and screws around down here, eventually it's going to have a correction. But here's the good news. Time is on our side, because the best thing about having an uptrending level of support is that the more time you give it, the higher the support is. And the more time that you give it, the weaker the bears get. Because as Bitcoin holds up here for longer and longer and longer and longer, the weaker the bearish argument gets. Every day that Bitcoin spends above $100,000, it gets another feather in its cap. We've been above $100,000 for X, Y, and Z. We've been above $100,000 for X, Y, and Z. We've been above $100,000. Right now, we've been above $100,000 for 163 days. So every day that Bitcoin spends up here, the more likely it is that we're basically never going to drop below $100,000 ever again. I want to show you another chart. I'm planning on putting this into a video. We're going to start doing weekend videos at some point, and I'm going to put this into a weekend video because it's a long-term piece of analysis. But this is a really cool chart that we went over on stream. This chart breaks down all of the time that Bitcoin is spent at a certain number of digits. So this green box right here represents Bitcoin at 3 digits. This green box represents Bitcoin at 4 digits. This green box represents Bitcoin at 5 digits. And then, of course, our current price up here in this box represents Bitcoin at 6 digits, $100,000 and up. Something that you'll notice is that once the market actually spent time in the next zone, like considerable time in the next zone, see, we just jumped into 4 digits for like a couple of days here. Wasn't enough. Over here, we jumped into 4 digits for a much longer time, right? Jumped into the 4-digit territory for 50 days. At that point in time, Bitcoin left 3 digits behind and never returned. Never, ever, 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 ever returned. Never returned. Over here, Bitcoin rallied up above, and I will say this, Bitcoin rallied on a parabolic breakout up above 5 digits for 90 days. And then it would take Bitcoin, you know, like 4 years, almost 3 years, 2.5, 3 years to get back up above 4 digits. But once Bitcoin confidently got above 4 digits, it never went back down into, when it got into the 5 digits, it never went back down into the 4 digits. And in this case, Bitcoin has rallied above 4 digits, and we've been up here for 160 days. There has never been a time in history that Bitcoin has spent 160 days in the next digit range in a row, or even in total, that's not what happened here, that Bitcoin did not stay in that range for good. So what I think is most likely at this point, and people are going to crucify me for this, that's fine. That's fine. You don't have to agree with me. But what I think at this point is that what is more likely is that Bitcoin might, at worst, put a scam wick down towards 90, bounce, and rally from there. Now, what would it do? Off of this uptrend, in this case, we rallied 174%. Off of this uptrend, Bitcoin rallied 100%. Off of this uptrend, Bitcoin rallied 70%. I think a 70% rally is very possible again. Let's call it another 70% rally. A 70% rally off of this uptrend is $160,000. What if the 4-year halving cycle is completely and totally dead? Because where the hell is retail? You know what retail did? They showed up with $10. They used leverage. They made it up to $100,000, and they just got liquidated. Retail's gone. Retail ain't coming, guys. This is the institutional bull market. But guess what? The institutions have way more money anyway, and they don't give a crap with the prices. They just buy every day, buy every week. People are buying Bitcoin for investment now. They don't care about the spot price. Most people that are normies, they bought Bitcoin on Friday. They don't care. They don't know that you got liquidated. These previous cycles were hype cycles because Bitcoin was immature. It's not anymore. Bitcoin is a mature asset class. It is here to stay. I see no fundamental reason whatsoever that Bitcoin should ever go below $90,000 ever again. For the next year, I can see a fundamental reason why Bitcoin would spend a few days to a few weeks below $100,000. But I see virtually no fundamental reason whatsoever that Bitcoin will spend a great deal of time below $100,000 ever again. I have been wrong before. I will be wrong again. I'm not perfect. I get it wrong sometimes. But I have been analyzing this market every single day for the last 8 years. I am a world-leading expert on the Bitcoin chart. There are over 5,000 pieces of content on this channel analyzing the Bitcoin market. I am one of the most respected sources in the world on the Bitcoin chart. I see no reason why Bitcoin needs to spend a lot of time below $100,000. What I do see is that the events of the last 4 to 5 months are Bitcoin trying to break the gravitational pull of the 5 digits. We're trying to reach escape velocity, and we just haven't quite got there yet, but we're going to. And then, boom, we're going to explode from there. up into the 150s, up into the 200s. And that's what you see happening over the next couple of years. So that's just the chart. Okay, that is just the Bitcoin chart. We've spent the first half of the stream just talking about the chart, about why the 4-year halving cycle is dead. Because it is dead. I am extremely confident. I'm like 80% confident that the 4-year halving cycle is dead. Especially if we don't have a blow-off top in Q4. Totally. It's completely dead. Totally dead. Here's the other reason. Here's the other reason. The liquidation was 5 days ago. Main Street and Wall Street already forgot about it. You and I remember it. We will always remember that 1010 was not a 10 out of 10. We'll always remember that. 10 out of 10 was not 10 out of 10. Okay, we'll always remember that. You and me, we got that. We carry that with us. The rest of the world has already forgotten about that, and they really don't care. All the people buying the IBIT ETF, they don't care. People buying Bitcoin in the 401k, they don't care. Sovereign wealth funds buying Bitcoin, they don't care. Banks buying Bitcoin, they don't care. None of them care. The only people that care are the leverage traders on X. I love you guys. That's like half my audience. The rest of the world does not care. So what happened on Friday doesn't change anything for them. They're just as bullish on it as they always were. Unfortunately, a bunch of people that were over-leveraged, or even just maybe they weren't over-leveraged and the exchange screwed them, because that happened to a lot of you guys. That affects them. But the real money is the hundreds of billions of dollars flowing into the ETFs that are being held spot by the ETFs. It's the tens of billions of dollars flowing into MicroStrategy. The 127,000 Bitcoin that the United States government just seized from a pig butchering scam. How the hell does a pig butchering scam have 127,000 Bitcoin? I'm in the wrong line of work. How do you get 127,000 Bitcoin in a pig butchering scam? What is a pig butchering scam? Did you guys see that? What? That's where the real impact on the price is coming from, is what's going on with the long-term accumulation. So much Bitcoin is going... Oh, here's another point. So much money is flowing off of exchanges right now, it's not even funny. Binance saw, I want to say $20 billion of outflows. Something like that, like $20 billion of outflows, just Binance. Because people don't trust exchanges right now. They're having a hard time trusting exchanges right now. And so they are cold storing Bitcoin at a rate that has never been seen before. How do we not believe that this is bullish for price action? How do we not realize? How do we not realize that people getting burned in trading and saying, you know what, I'm just going to buy Bitcoin, stick it in my sock drawer for 20 years. How do we not realize that removing all of this liquidity from the exchanges, putting Bitcoin into cold storage, and shifting the cultural mindset away from overusing leverage into actually using cold storage? It's okay to use leverage, but people are using a lot more in cold storage now than they were, which they needed to do. We've always advocated for at most 20% of your portfolio being on the platform, 80% of it being in cold storage. We've always advocated for that. The entire industry is moving in that direction right now of cold storing Bitcoin. How is that not bullish for price in the long run? How? In the short term, the sentiment sucks. And that could drive Bitcoin back down to baseline around 100K. But you, my friends, because you watch this channel, are not just looking at what's happening in the next week. You're looking at what happens in the next 3 months, 6 months, 12 months, 5 years, 10 years, 15 years. Because we don't get caught up in the day-to-day, because when in doubt, zoom out. Bitcoin is the most successful hard asset in the history of mankind. In less than 15 years, Bitcoin has grown further than gold did in the last 50, 60, 70 years. Since Bretton Woods ended, gold is up 12,000%. Bitcoin is up 12,000%, not in 60 years. Nope. Bitcoin's up 12,000% in less than 10. If it is not obvious to you that this is all going to blow over because Bitcoin doesn't give a crap about U.S. trade relations with China, welcome to Bitcoin. You must be new here. The future is decentralized finance, and specifically, I love DeFi, but specifically the future is Bitcoin. Now, don't get me wrong. I think DeFi has a ton of functionality and it's growing very quickly for a very good reason. I am very tempted just to screw the banks and just ditch everything and move everything to Bitcoin, just completely ignore the US dollar. I'm tempted to do that. I'm not going to. Because I want to give Bitcoin a lot more time to grow. But I'm tempted to do that because DeFi and Bitcoin is at a place right now that our family of 5 and our business, I could move our entire company onto a complete Bitcoin standard. It is that mature. It could be done relatively easily. It could be done very easily. The future is here. All right, so let's go over enough of my ideological rambling on Bitcoin. Let's take some more coffee because obviously we need that, right? Here's some other reasons why Bitcoin is going to perform very well. Number 1, Jerome Powell came out, did a speech a couple days ago, talked about the rate cuts, talked about quantitative tightening. I want to break that down. We basically have a guarantee at this point that we're going to be seeing a rate cut on October the 29th. That is in 14 days. Great timing. When that rate cut comes, it'll probably be helpful for Bitcoin. Maybe not in the short term, because rate cuts in the short term are bearish. A lot of you guys who watch this channel did not get burned at the last rate cut because I told you that normally when rate cuts happen, they cause a short-term correction followed by a longer-term rally. The rate cut happened here, Bitcoin crashed, and then it exploded because we sold the news, and then when it set in, then, oh, wow, what's going to happen? Then Bitcoin rallied. On October 29th, when we see that rate cut, it's very possible that Bitcoin sees another dump. In fact, something to consider, something I just thought of, something to consider, is that if Bitcoin does see a candle body down to 100 and a wick down to 95 to fill that CME futures gap, the rate cut could actually be the thing that triggers that. You see max pain, people thinking that we're going to, people think that we're going to a bear market, people sell, people open up shorts. And then when Bitcoin comes back, it's going to absolutely annihilate the short traders. Be careful with shorts. Be careful with shorts. There are opportunities, obviously. You could have made a lot of money on Friday shorting. So you can make money shorting. Just be careful. But when this rate cut comes, there's a high probability that it will be a short-term bearish event for Bitcoin. Long-term bullish event for Bitcoin. Then in December the 10th, we have a guarantee of another rate cut. They've already said that they're going to have another rate cut. Jay Powell talked about this. Rate cut here. Rate cut again on the 10th of December. When you get to January, we have a very high likelihood that we're going to see a third rate cut. The Fed needs to giddy up. Inflation's hot. Job market sucks. They should have done a 100 basis point rate cut last month. They didn't do that. So now what we're going to see happen is them slowly continue to cut rates. What happens with that, in case you don't understand, because remember, I have the heart of a teacher. It's not my goal just to give you facts so you can recite. So at the water cooler, you can sound smart once you actually understand this. The reason that the rate cuts are important is because they're the base rate. All the banks loan money out, and they borrow first from the Fed when they need cash. And so when they're loaning out money that they don't have, they're borrowing it from the Fed, and the Fed's creating it out of thin air and loaning it out at this rate. And that rate means that the banks arbitrage the difference. If they charge you 8% and they're getting 3.5% from the Fed, then they make the 4.5%, right? So if the Fed's rate goes down, then it causes the capitalistic, the capitalism of the banks, there's not much of it, but this is a capitalistic force in the banks, to have a race to the bottom. Who can provide the lowest interest rate on who can provide the cheapest interest rate on mortgages, for example? It brings mortgage rates down, brings credit card rates down, brings all kinds of rates down. Theoretically, it should bring the treasury, the bond rate down. It hasn't because there's a lot of uncertainty about bonds right now, but theoretically, it's supposed to. This makes debt cheaper, which makes it much more appealing to invest in an asset such as Bitcoin. If inflation is running hot, then theoretically Bitcoin is going to run very far, which increases the growth rate of Bitcoin, increases the growth rate of crypto, and the debt is cheaper. So in a sense, you can get cheaper debt and Bitcoin will run faster because the lower interest rate makes inflation run hot. And so the spread between borrowing and investing is greater, which means it becomes far more attractive to invest in Bitcoin on debt. It's what people do. It's what they do. If Bitcoin's going to grow at 30% and the debt just went down by 1% and the growth rate went up 5% from 25 to 30% because inflation is running hot and the interest rate went down by 6%, you just got 6% more on your money because the Fed cut rates 1%. It's a big deal. This is why the stock market's going to go nuts. People are calling for a massive crash, massive bubble burst. You're not going to see a massive bubble burst in the short term. And the reason is because the bubble is not bursting in a way that you can see. The bubble is bursting through inflation. Inflation is going to continue to run hot. And that leads me to my second point with the Fed here. Jerome Powell signaled an end to quantitative tightening. CBBS, Central Bank Balance Sheet. USCBBS, United States Central Bank Balance Sheet. This is the balance sheet of the United States Federal Reserve. The United States Federal Reserve can inject liquidity into the market in a number of ways. They can inject liquidity into the market through the purchasing of treasuries, which is basically the way that the United States can loan money to the United States government for free. They can give them money and, basically just don't even worry about having it back. It's basically a form of money printing. And they can also do it through the purchasing of mortgage-backed securities, which is essentially a way to give money to the banks. The Fed, when they do quantitative easing, are essentially giving money and liquidity to the banks and to the government, because obviously the government and the banks need more money, right? Right, of course. About a year ago, I forgot how long ago it was, I placed this flat line on my chart on USCBBS because I predicted somewhere around this level, if I recall correctly, somewhere around this level is where quantitative tightening would end. After COVID, we saw a huge amount of quantitative easing. They added $5 trillion to the market, which crashed the value of your dollar. Absolutely crashed the value of your dollar. If you look at M2, M2 money stock is $22 trillion. See that? $22 trillion. The balance sheet at the top was $9 trillion. The Fed is responsible for the inflation that occurred during COVID. The 40% inflation came almost exclusively and directly from this chart. This chart is why your groceries are twice as expensive as they were. This chart is why your wages went up 10% and your rent went up 60%. This chart is why you can't afford anything anymore. And this chart is why Bitcoin is necessary, because it is killing you and robbing you blind. This is the greatest financial theft in the history of mankind. There has never been a greater heist than what is happening at the Federal Reserve through quantitative easing. It is theft, plain and simple. They are stealing your wealth through inflation, and they're about to start doing it again. Quantitative tightening has been reducing the size of the balance sheet, but we were never going to see the balance sheet go back to where it was at $4.5 trillion. It was never going to happen. It was never going to happen. That's not their play. They don't want that. It's not going to happen. They were always going to stop somewhere around here. This line's been on my chart for a long time. You guys might remember it. This is about the place where I expected they would end QT. And they will end QT, and what they will end up doing after they end QT is that they will go back into QE. Every time in history that you've seen the Fed stop quantitative tightening, very soon thereafter it went into quantitative easing. Ended quantitative tightening, went into quantitative easing. I'm going to draw a vertical line here. By middle of 2027, we're going to leave this line here as a little time capsule. By middle of 2027, quantitative easing is going to resume. That's what I think is going to happen. By middle of 2027, quantitative easing is going to resume. That will be an explosive thing for Bitcoin. You will see gold go to $10,000 an ounce by the end of the decade. Put my money where my mouth is. Gold to $10,000 an ounce by 2030. Bitcoin to $350,000 by 2030. Bookmark it. It's going to happen. We're going to be in that range by 2030. And a large part of it has to do with the fact that QT is ending. When QT ends, it generally means that QT is starting. Sorry, it generally means that QE is starting. When quantitative easing starts, you're going to start noticing, again, groceries going up. I remember when a gallon of milk was $3. Now it's $8. I remember when beef was $3 a pound. Now it's $5, $6, $7, $8. I remember that. I remember when it was the 99-cent store. I feel old. I feel like one of those old people saying, I remember when it was a nickel store. The dollar is going into a very, very dangerous tailspin, and Bitcoin is going to profit off of it. By the way, if you guys haven't already, make sure that you self-custody your Bitcoin safely. And we've got a really good sponsor I want you to check out. They're called Stamp Seed. You can take this hammer that they send you and you stamp. They've got a little stamp kit. You stamp your seed phrases into this titanium. No, you don't send it back to them. You keep it. They don't know your seed phrases because they never see it again after they send the product to you. They never touch it. They just send you the hammer and the stamp and the seed and the plate. And you stamp your seed phrases into this titanium. This can withstand a huge amount of heat. If I recall correctly, the melting point of titanium is about 3,000 degrees. There you go. The melting point of titanium is 3,000 degrees. 3,000 degrees. House fires, even really bad ones, almost never get above 3,000 degrees. Temperatures at the ceiling can exceed 1,500 degrees. Eye level, heat can rise to 600 degrees Fahrenheit. It'd kill you if you were in there. Get out of your house. This would be completely free. A little bit of char, you can wipe it off with your hand as soon as it's cool, and you can read your seed phrases. This right here will protect you. By the way, but Jeb, I have all my seed phrases in a safe, and the safe has a fire rating of up to 1,800 degrees. Good for you. Do you know how that works? When the fire is around your safe, because you got this giant gun safe that you got your seed phrases in, yeah? If you think everybody doesn't realize that, I mean, you got this big target right there. When that safe, what that's doing is when you have a house fire, that safe, all the joints swell shut, and it turns into an oven. That fire rating says that so long as it's under a certain degrees, the temperature inside the safe won't get above 350 degrees, is basically the way that safe fireproof ratings work. If you have your seed phrases on paper, your guns might be fine, your gold might be fine, but that paper is toast, literally. But if it's on titanium, you're fine. It's very important that if you self-custody Bitcoin, you put it on one of these. You can take this and you can go up into your attic and you can take these 4 holes, you can screw it into a rafter somewhere and nobody will ever find it. You can bury it in the backyard, you can do whatever you want with it, but this right here will keep it safe from a nuclear holocaust. Use this and keep your seed phrases safe. Check them out, links down below. Let's read a little bit of chat. Really appreciate you guys for tuning in. It'll happen even faster than mid-2027. It's going to crash. There's going to be a crash in 26. Yep. Let's see. Yard Dog donated $100. Thank you again, Rick. Appreciate it, man. That's like 4 days in a row. Thank you so much for the donation. If you got anything you want to add or say, be happy to read it. God bless you, man. Yard Dog is Rick. Good guy. Good guy. BTC is breaking down. The leverage is killing the industry. The industry is unkillable. At least Bitcoin is. I mean, there's a lot of things in the industry that can be killed, but the Bitcoin's fine. I do agree that over leveraging is not great for the industry. You guys need to follow one of our teachings. I want to remind you, anyone that watched our stream before the Friday crash did not lose a penny. We did not get liquidated for a cent. Not one. We were not in long trades. I told you to stay out of long trades Friday morning. Right here on Coffee and Crypto. I told you to stay out of long trades. And in the video that went out at 2 p.m. that afternoon, I said stay out of long trades. You guys remember that. On top of that, I've also encouraged you to only ever allow 20% of your investment portfolio to be on the perps. If you've got $10,000, $2,000, that's your limit. You don't go over that. And the reason is for this kind of event. I'm not just saying you keep all $10,000 on the exchange and you only trade with 2,000 of it. No, you've got 10 grand. 2,000 of that is allowed to be on the exchange, and you don't use all 2,000 in every trade. Jeb, that's too much money. Get a job. Come on, take this seriously. Seriously. Get to work. If you're single and you're not working 80 hours a week, I want to know why. If you're married and you have kids and you're not working 40 hours a week, I'd like for you to figure out why. Why not? Get to work. Come on, be serious. You're not going to get anywhere sitting on your butt all day. Get to work. Make some money. Make some money by contributing to society, and then after you've elevated and grown out of that, then sure, go trade. Do it. But prove that you can make some money. Come on. Get serious. Jeb's on Tylenol. Ha-ha! That explains it. That's where it came from. I took Tylenol one time. Jeb is smoking math. I do love me some good math. Appreciate you, Jeb. Appreciate you too. Thank you. Spot only for Queen. There you go. Preach. I will. Thank you. Not sure if you already explained. I've watched a couple of your videos, but why does Bitcoin need to keep 110K support? That's a great question. Let's talk about that. The reason we need to keep 110K support or drop is because of this uptrend right here. Let's find it right here. This uptrend right here has kind of underpinned the Bitcoin market, and it basically creates this zone between 110,000, which is our current local bottom, and 112, which is our previous all-time high touch that we set on the day of the conference earlier in May. This zone is very much critical to Bitcoin because it is the difference between all of this trading that took place over here and all of this trading. It is kind of the gateway between those two zones. And if we fall out of this zone, then that means we basically went back to the previous level in the Mario world, and we've got to redo it. If Bitcoin drops below 110 in that case, then we would be looking for support architecture in this previous zone. Now, the good news is we theoretically have support here at 107. We theoretically have support at, 104. We have supported 100. So if we break below 110, it's possible that we could bounce at 105. But the question becomes, where are we going to bounce? I mean, we could look at fibs here, for example, and what you'll notice is that we have a fib level at 107, right? 107, right there. Boom. And we've got the 0.5 fib level at exactly $100,000. And on top of that, wouldn't you notice, the Fibonacci retracement gives us the golden pocket at 94K. So when I say that Bitcoin, in a worst case scenario, drops down to 94,000 and bounces, that's why I'm saying it. Because it lines up with all of the charting. If you draw your Fibonacci retracement, right there, a drop down to 94K would hit that long-term uptrend. It would fill the semi-futures gap, and it would drop us right down here under the Fibonacci golden pocket. We drop down to 100K, that's the 0.5, and then we also have support here at 107. It's possible we drop below 110 and we hold at 107. That could totally happen, right? But any of those levels are fine. It's totally fine if we go to any of those levels. Totally fine. And in the worst case scenario, if we did run all the way down back to the baseline at 75K, well, that's our prediction for what a bear market would look like. That would be the entire bear market would be a drop down to 75. In my opinion, I don't see Bitcoin ever going below $75,000 ever again. I don't see that happening. And there will be a day in the near future where I'd say I don't see Bitcoin ever going below $100,000 ever again. I can't say that with confidence yet, but within 2 years, I think I'll be able to say that. And as far as historical precedent is concerned, take a look at this chart. If we draw our inverse Fibonacci, where did Bitcoin retrace back down to? The 0.618, right there. Look at that. We dropped back down to 75,000. It was our previous all-time high. The Fibonacci golden pocket was down here to hold us at 70,000 to 72,000. For any of you that were watching the channel earlier on this year, we called for $73,800. In fact, I have the screenshot. Let me find it. I have the thumbnail. Let me find it. Hang on. I'm pretty sure I have the thumbnail from that video still, where we predicted it. We predicted the last correction almost perfectly. Let me see, can I find it? I know it's here, because I've used it recently. Where is it? I know it's in here. Here we go. This is one of them. There's multiple of them. This was a thumbnail from approximately 2/28/2025. $79,000 Bitcoin. $228 was right. That video went out on this day. Yeah. We were predicting Bitcoin going down to 75. I know there's another one, though. I know there's another one. Yeah, here it is. Look, here it is. This is 2 days before that. 73,800. This was on 2/26. These thumbnails. 2/26 was right there. Bitcoin was trading at $84,000. We were also calling for 73,000. I don't know. I think there's some other thumbnails in there. But we were also calling for 73,800 back here. We called the last correction perfectly. And by the way, just to kind of prove that, I was sitting on over $150,000 of cash waiting for that crash. And I dumped it all in below 85 and 90. Because our technical analysis told me that we were going to drop back and retest this high. My technical analysis now is telling me that we're going to drop back and test 95 to 100. And from there, we're going to have a really strong bounce, and you're probably going to rally up to $160,000 to $170,000. So I just want to encourage you that if you have not already, make sure that you're ready for that. These are cycles that are happening now. We're not looking at 4-year halving cycles right now. We are instead looking at a different kind of cycle. We're looking at cycles that have to do with, let me see if I can try to find something here. We're looking at cycles that have to do with that uptrend. We're looking at cycles that have to do with the business cycle. We're looking at cycles that have to do with liquidity. We're looking at cycles that have to do with the stock market. We're looking at cycles that have to do with BlackRock. We're looking at cycles that have to do with a lot of things other than the halving. The halving was what was governing cycles for a long time because it was the foundation of the market. But now there's so much more impacting Bitcoin. And so you really need to make sure that you're investing in Bitcoin for the long term. One of the most important things that you'll ever do when you're in crypto is put Bitcoin into long-term storage where it is safe. And one of the best ways that you can invest in Bitcoin and keep it safe is by investing in Bitcoin in a tax-advantaged way. So I want to highly encourage you to check out I Trust Capital. All you have to do is go to the link in the description. In fact, I need to update it because we just changed it. So give me just a second to update it. But you are going to want to go to the link in the description box down below here in just a second. And you're going to want to sign up for I Trust Capital. I'm going to share with you exactly why. Here, let me just update this link really quick so you get the right link. Update this. We just got a new link out because they just finished this landing page I'm about to show you. It's so beautiful. I cannot wait for you to see this. It's so cool. So cool. I love it when people build landing pages with our stuff on it. Makes you feel good. All right, if you refresh the page, you're going to see the new landing page. If you guys have not already signed up for I Trust Capital, you need to. And I want you to do it with us because you are going to get access to something very cool. First and foremost, you are going to get access to a $100 funding bonus. When you deposit into I Trust Capital, you're going to get $100 for free. And you're going to get access to the premium custody accounts. Here's what this means. You are able to invest in Bitcoin and cryptocurrencies spot through your IRA, and through your traditional IRA, and through an SEP IRA. These are different tax-advantaged accounts that are very important because they reduce your tax burden in one way or another. They can reduce your tax burden through being a tax deduction this year, as in the sense of as a traditional IRA, or in the sense of a Roth IRA, you pay with post-tax money and you don't pay any taxes on the withdrawal. On top of that, if you ever want to withdraw from an IRA, you pay a simple 10% penalty to the federal government because you did take the tax break, and you're able to pull your money out of that. So it's not locked in here forever. You can take it out. You have to pay a 10% penalty, but you can pull it out. Now, here's the kind of a cool strategy. If you ever did want to get money out of a retirement account, doing that in the stock market, paying the 10% penalty would really freaking suck, right? Before 59.5. With Bitcoin, with how fast it grows, you could honestly invest in Bitcoin through the Roth IRA or through the traditional IRA, ideally through the traditional IRA if you can, get the tax break, use the deduction, lower your taxable income, pay less money in taxes, and if you want to withdraw in 5 or 10 years when Bitcoin is up a huge amount, up 8, 10, 15x, pay the 10% penalty, whatever. You ended up actually with more Bitcoin in the long run because you got the tax deduction on the upfront and you were able to put that into Bitcoin. So investing in I Trust Capital should be the very first thing that you do every single year is max out your IRA. We max out our IRAs every single year, January 1st, $14,000 day one. All of you can't do that, but you should make sure to max out your IRAs every single year, if at all possible, because of those tax breaks. I don't know about you, but the reason I got into Bitcoin is because I want as little money as possible going to Uncle Sam. So if you sign up for I Trust Capital by going to itrustcapital.com/crypto-jeb, that's the link in the description box down below. That's where you'll find this. Then you can sign up and you'll get $100 for free as a funding bonus while also helping to support the channel. You've got all kinds of tax advantages in here. You can buy and sell crypto 24/7. There's low cost. There's no monthly fee. It's a simple one-time flat fee when you invest, and then that's it. It's very simple, and you get access to all of the different tax advantages that IRAs, 401k rollovers, traditional IRAs, Roth IRAs, all of those can provide. And you've also got these institutional custody, premium custody accounts. Basically, these are one way in, one way out accounts. Someone can't hack your account and drain you because you can only withdraw funds to the account that you deposited with. This is the only time I've ever heard of anything like this happening. This will pretty soon probably become industry standard because it's such an incredible idea. But basically, the idea is there's no external wallets. You can only withdraw to the account that you deposited into, and you can only withdraw in cash. So you can't even just withdraw you have to convert it. So that keeps you safe in case somebody ever managed to compromise your account somehow because you were careless with your password or some kind of sophisticated phishing attempt happened. And also, guys, you can trade in here. And when you trade in here, All the tax complications that you have everywhere else are gone. No monthly fees, 1% cryptocurrency transaction fees on the buy and sell. That's it. It's really that simple. Very simple. They've got over 200,000 accounts and over $15 billion in here. They are the most trusted IRA and Roth IRA provider in the game, and you should definitely sign up and get $100 for free with the link in the description box down below. Why wouldn't you? There's really no reason not to. All right, let's read a little bit of chat here, and then we're going to wrap it out. Fred Sloan said $177,000 Bitcoin in December. Cycles were never a thing. They happen to align with liquidity and macro. Possibly. I do lean in that direction, honestly. God bless you and your family. Thank you very much. 50K next bear market. 50K, I would say, would be the absolute lowest. Let's see. Great comments in chat. Really appreciate all of you guys. 96% chance of rate cuts in 2 weeks currently. Yeah, I mean, it would be shocking, honestly. It would be absolutely shocking if we didn't see a rate cut. It would be shocking. Gap down this weekend to fill the gap on CME, on Coinbase at 106.5. Yeah, I do think that you're going to see some scam wicks down. It's not the end of the world. It's something that you need to just realize is part of it. But yeah, one thing I also want to mention, this is something that I'm very excited about. My financial coaching is online. People are already signing up. I've already got some appointments on the books. My financial coaching is open and for a limited time only. I've done 2 things to make it more accessible because a lot of you guys got burned and I want to help. I've given a 20% off coupon code on my 1-hour financial coaching session. So it's $320 instead of $400. And I have opened up my entire schedule Monday through Thursday, 24/7. I will have a call with you at 2 a.m. if that's what you've got to do. And I also opened up my Saturdays from 9 a.m. to 12 noon. Again, for a limited time only, because I know a lot of you guys are working hard. You probably have to earn back a lot of your money. This is a way that I can give back to the community is with this discount and with opening up my hours to make it even more easy for you to access me. I have a coaching call tonight between 5 and 6. One of you guys signed up. Very excited about that. We got some more coming as well. I love sitting down and talking with you guys. We have a full money back refund guarantee. There is absolutely no risk whatsoever to sitting down and talking with me. If I don't help you, I will give you your money back. No questions asked. It's that simple. I have done a lot of coaching calls in my time. I've never had anybody tell me that it wasn't worth every single penny because I can help put you on a financial path to being more successful. That is the reason that I do what I do. If you trust me enough to listen to me for an hour here on YouTube when I'm talking to thousands of people instead of just you one-on-one, I think you would understand that there's a lot of value with you and me sitting down for an hour where I can help get you on the right track financially, whatever that may be, whether it be personal finances, budgeting, investment, portfolio allocation, planning, diversification, risk management, etc. I'm not going to tell you what to invest in. I'm not going to be your financial advisor. I'm not interested in doing your thinking for you or making decisions for you. I'm interested in being your teacher and teaching you how to do it for yourself so that you have sovereignty over your wealth. If you would like for me to personally help you walk through the difficult time that we're having in cryptocurrency here and prepare for the next leg up, because one is coming, then make sure to sign up for my 1-hour financial coaching with the link in the description box down below. And also, if you're interested, you can check out the Cryptocurrency Technical Analysis Academy with the link in the description box down below. I have also added the JEB20 coupon code on that for a limited time. And while we're here, we'll also show you this. Also added the JEB20 coupon code on CT2A. As you can see right here, CT2A is currently 20% off. You can learn everything you need to learn about technical analysis right here through the Cryptocurrency Technical Analysis Academy. Give me a 1 in chat for anybody who's gone through CT2A and loved it. I know a lot of you guys have gone through it. We've sold over 5,000 copies of CT2A to students around the world because it is hands down the best technical analysis academy in the game. And on top of that, if you'd like, you can learn how to be financially sovereign through the Financial Sovereignty Academy with the link in the description box down below with coupon code JEB20 for a limited time as well. This is where I will teach you how to manage your money so that you can succeed and put yourself on a path towards freedom. The Financial Sovereignty Academy and what it teaches has helped me so many times over. It's not even funny. The 7 laws of money, the 10 steps of the FinSov way are so very valuable. You should absolutely sign up for both of those academies. Go through them with haste. Sign up for a coaching call so I can help you put it all together and build some wealth. I love you so much, and I want to see you succeed, and I am here for you. If you want, I am more than happy to help you in any way that I possibly can. Again, if you enjoyed today's video, make sure that you hit that like button, subscribe to the channel, do a quick recap before we wrap it out. Right now, we're looking at a possible correction down to 95 to 100. We would probably bounce from there. I see no fundamental reason that we would have to see Bitcoin fall below that uptrend. I just don't see it happening. I don't see any reason that would have to happen. It's possible that we get down there and you see some kind of just, an exchange blows up or something and Bitcoin crashes. It could happen, but there's so much support beneath Bitcoin. If it really starts falling, I think we're going to be just fine. I will be looking at putting in a lot of buy orders down here at 95 to 100, setting limit orders. Very excited about the possibility of getting some entries down below $100,000 again, because it's very possible that will never happen again after we drop down to that level. It's possible that it's in the past completely now. We might not drop down there even now. We might not even drop that low. But what I do think is at some point in the next few months, Bitcoin is going to bottom, whether it's here at 110, here at 107, here at 100, or here at 94, and we're going to do this. It's just a question of where that next rally starts. It's going to happen sometime within the next couple of months, and it's going to happen sometime between 94 and 110. We don't know exactly where, but the idea is as we go lower, we buy more. We look forward to that next leg up that we'll be building over the next 3 to 9 months. Very excited to walk that journey with you. If you have not already, also make sure to sign up, subscribe to the channel, stay tuned for more content. I love you very much. I really appreciate you all being here. Just continue on with what you're doing. And stay tuned for more content. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.